Welcome to Company Spotlight with Chris Temple, editor and publisher of the National Investor. Now in his fifth decade in the industry, Chris prides himself on his ability to find compelling investment opportunities in companies of all kinds, usually before the crowd. As he stresses at the National Investor, you can get information anywhere, but from Chris you get knowledge. And it is that knowledge he first gets from his research into companies, often visiting projects all over North and South America that he is privileged to pass on. Now, to learn about today's company in the spotlight, here's Chris.
Welcome in, folks. This is Chris Temple, editor and publisher of the National Investor. And today we're going to take a high-level view of something which is at the same time the biggest public policy issue that we can be discussing, as well as the biggest investment issue for investors that we can be discussing. And I talk, of course, about the catch-all term green energy, the green revolution. You can put all different kinds of labels on it. Many have that are both for it and against it, and sometimes without a whole lot of knowledge behind that. And we're going to add to that knowledge today. There's all kinds of moving parts to this thing. And the best I can explain it in starting out, before I bring on my guest to today, is Martin Turenne. He's the CEO of FPX Nickel. We'll talk about that in just a moment and bring on Martin in just a moment. But imagine if you had a friend or relative who put on a great big show saying that, hey, I want everybody over to my house for Thanksgiving this year. And you will never have in your life seen such a wonderful and gaudy and delightful meal as what I'm going to have for you. And you show up, you bring your family, you bring all, all your friends come along, other relatives come along, and your friend who invited you, their dining room table is packed. And what does he show? But he holds up a magazine from Bon Appetit or Cosmopolitan or something, and says, look at this meal. Doesn't this look great? And you're looking at the magazine. Well, yeah, that looks good, but where's the actual meal? What are you talking about? Are you insulting me? This is a wonderful meal. Look at all these things. Look how delicious this is, and this is, and that is. And if that's not enough, we'll put on a Gordon Ramsay video for you and show you how wonderful everything is, but you may starve before you actually get any food. And that is really a microcosm of where we are at in the world, and some places worse than others, when it comes to this whole green energy thing. Because we have a situation where we got lots of wonderful ideas, lots of things that can work if all of the things are done to make it happen. But it's not. Now, this first chart I want to put up here real quick shows the investment in, I'm going to read the title of it, the Global Investment in Energy Transition by Sector. And one of the things that you will see is extremely noteworthy here is that only in the last couple or 3 years, 2019 through 2021, can you register visually the amount of investment that's gone into the materials that are central to this whole game plan. It seems sometimes, folks, like a lot of people believe that Elon Musk at Tesla, or the people at Rivian, or the people at the big three and other big European and other and Asian automakers, it's like they all have magic extrusion machines and they just spit out electric vehicles and everything is wonderful. It doesn't work that way. Now here, the second slide shows you what is going to be needed for us as a world, and each individual country, some are worse off than others, what's going to be needed to make all of these goals happen here. And Martin and I are going to explain some of these nuances in just a second. But again, you see from 2022 to 2025, there's going to need to be a substantial increase across the board, including on money spent for materials. And that's going to only increase as we get into 2026 to 2030. And this is simply to meet some of the claimed goals that governments have, that automakers have, that battery makers have, and others. We've incredibly put the cart before the horse on this whole subject. You know, only recently did Elon Musk at Tesla, I referred to him a minute ago, come out and say that, you know, we're not going to meet some targets. Why? Because of supply chain issues. It's the speed with which things come, and it's the fact that a lot of stuff isn't even in place to meet a lot of these goals. Now, last fall, I authored the longest by number of pages and arguably the most important issue, special issue, I should say, of the National Investor ever on green energy. Here's the cover of it. If you've not ever received a copy of this, drop me an email. I will send it to you. This video is going to be part of a follow-up where we talk about what's going on now as we begin 2022. Where is this situation better? Where is it worse? We can't possibly cover all of this today, but we will be doing that. For those of you that live in the upper Midwest and or are interested in traveling, we're going to be having an investment conference early in May in Chicago, where the whole green energy and supply chain thing is going to be part of this. We're going to have both companies and industry experts at this thing to talk about both the public policy subjects behind this, as well as have companies there that represent investment opportunities in different parts of energy more broadly. So with that setup, I want to introduce Martin Turenne. He is the CEO of FPX Nickel. It's a company with one of the largest and most interesting nickel projects in the world. Martin, thanks for coming on with us today.
Great to see you, Chris, and great to speak to your audience as well.
Well, thank you. We're going to have in the future, a couple weeks hence or so, give or take, depending on our schedules, after this broader video, we're going to take a deep dive specifically into FPX Nickel. But since we're mentioning the company today, I want to put up on a screen here quick, their own forward-looking statements, items to let you know that sometimes we say things that with all the best intentions that may or may not happen right as we think they will. Be aware of that. And now following that on the screen is my own disclosure to let you folks know that number one, FPX Nickel is already a recommended opportunity for my paid membership audience at the National Investor. And secondly, for this and other work FPX Nickel does pay us to help them get a broader outreach than they might be getting otherwise. So with that said, Martin, you know, those couple of slides that I had on a few minutes ago are emblematic of a lot of stuff that's been in the media recently. And you and I talked about this over the last couple of days or so, late last week. And in the written information that will be accompanying this video, I'm going to be getting into some of the specifics and links. But Richard Adkerson, who we all know for a long time, one of the deans of the resource industry, he runs Freeport-McMoRan, and he was talking about the shortfalls for things like copper. A good friend of mine, Keith Phillips, the CEO of Piedmont Lithium, which I was pounding the table on when it was $6 a share, and then they announced a deal with Tesla and the stock runs to 80. It's since then come back down to around 50 or so. He's been great on this as far as the lithium situation is concerned. You're better than anybody I've heard in the recent past. We're going to talk about this on nickel, but almost across the board, it seems like an analogy that I kind of came up with off the top of my head. In fact, that's probably going to be another cartoon I've got to get my cartoonist Jerry King to do. I'll show Biden at the dinner table with that magazine, you know, how wonderful the meal looks, even though there's not a darn thing on the table. But you've been good on the nickel area. And generally speaking, I mean, aren't we in a lot of trouble when it comes to having laid all of these grandiose plans for battery manufacture and car manufacture? But where's the beef? Where's the metals?
Yeah, it is a significant problem. We're in the fortunate position as a company developing a very large nickel deposit, where particularly over the last year, we've had a lot of engagement with the major car makers, some of the new car makers who are focused on electric only, as well as the battery makers. And you know, to put it mildly, they're ill prepared for the procurement challenges that they face in nickel and the other main metals and commodities that they need. This is an existential issue for them. You know, without those metals, they simply can't meet their EV targets. So the CEOs of these companies have all made these very sort of bold predictions about what percentage of their car sales will be EVs by 2025, by 2030 and beyond. And, our conversations with their strategy and procurement teams to us shows a bit of a gap there between, let's say, fantasy and reality. They just do not have the security of supply of the raw materials yet to be able to meet those targets. It's as simple as that at this point.
Well, you say a bit of a gap. I think in some ways it's a chasm. I mean, GM the other day said that they want to be 100% electric by 2035. President Biden down here, Europe and Canada, of course, but Biden wants half of all manufactured vehicles in this country to be electric by 2030. And yet, as Adkerson said in his great interview with CNBC, I'll have the link in the written material that accompanies this video. People don't realize that you don't just flip a switch when the light bulb finally goes off over your head as a politician, a policymaker, a car maker, or whatever, and say, okay, well, I'll buy X number of tons of nickel from you or lithium from you. These things take years, don't they?
They do. The average time from discovery of a deposit to it going into production is usually in the range of 15 to 20 years, just to put that in context. So if things haven't been discovered yet, they won't be available until, we're well retired, probably, Chris. One of the things I would look at as a kind of a canary in the coal mine is the chip shortage and how deeply that has impacted things. Now, the chip shortage has really just resulted as a result of some plant closures owing to COVID and some other sort of hiccups in the supply chain. And on that very small basis, that very narrow basis, the whole edifice of the car industry has been shaken utterly. Chips are just a small part of the vehicle, but they're obviously fundamental. The same is true, but at a much larger scale for all the raw materials that go into these EV batteries. So if the chip shortage is the canary in the coal mine, the raw materials shortage is, I don't know what, the flock of 10,000 geese in the coal mine.
It sounds about right. Yesterday I had to help a friend out quick. She has a Tesla. And a few weeks back, somebody hit her coming out of a parking lot and just kept going. They haven't found the person yet that did this. And I didn't see it, and I wasn't with her when it happened, but she showed me the right rear of the vehicle, and basically from the right rear tire back, it crinkled in that fender and did some other, it wasn't major damage. It was only to that part of the car. Now, she's got a rental car right now. Guess what the cost and time is involved in getting that thing fixed? She told me, my jaw dropped, $27,000 to repair this car. And it's going to be a few months because Tesla's game plan is that they so micromanage all their chains and everything is so specialized. And this is another part of this whole EV industry that nobody has figured out yet. The only one I've seen, Martin, that has, and you saw this news, I'm sure, is when Ford a few months back announced that they were going to invest 11 point some billion into a few plants in Kentucky and Tennessee to fill in parts of their own EV supply chain. God bless them. I hope it all goes great. One of the things that they added to their news is that they're going to invest several hundred million, I think it was, into a trade school to fill in what is going to be another yawning gap. We're going to find out even when they start to produce more of these things, who can work on them? Who knows it? Look, when I was a kid, I used to tear apart motors and put them back together again. Now working on a vehicle before EVs came along is like working on a space shuttle. It's going to be worse and more specialized afterwards. I'm putting up a chart here that I want you to comment on. And this shows from last year and projecting through 2026 what the projections are for raw materials prices for EVs. And you've got nickel, aluminum, cobalt, copper, two kinds of lithium that have different uses depending on what kind of battery for short distances or long distances, and then graphite. And in almost every single case, you're seeing prices are going to continue trending upward, even if primarily in the case of lithium, there's been enormous runs in lithium prices recently, just off the charts, up several times in just the last year in price, they will inevitably even out somewhat. And a lot of this, of course, is projections based on what the current view is of EV offtake. I want you to speak to that maybe generally, but then focus in on the one metal that has been a laggard. We're going to talk about this more, and that is nickel, where the supply and demand inadequacies, for lack of a better term, haven't really showed up yet, but are likely to imminently.
Yeah, so at a big picture, the car makers face two major problems. One is just getting enough of the raw material units and just making sure there's enough mine supply of these units. And going forward, we see the distinct possibility that there will not be. But over and above that is, in a world that is short supplied of these materials, that's going to lead to significant elevation in the price of those commodities. And that craters the whole business plan. How can you model the sticker price for what that Ford F-150 pickup is going to be in the year 2030 if you have no certainty over what the cost of your raw material inputs is going to be? And so ultimately, the only way for the car makers to solve for that, I think, they will have to own mines or own ownership interests in mines, because that's the only ability they'll have to actually control the cost input there. They'll be able to pay cost for the nickel units and other units that go into those raw materials. So there's a supply issue, but there's also a fundamental price issue that I think this chart captures quite well. And with respect to nickel, part of the reason it's been a bit of a laggard versus things like lithium, for example, is it's a much bigger market. It is about 10 times the size of the lithium market in terms of annual tonnage produced and consumed. So the smaller the market, the easier it is to see price movements in that market with new changes at the margin in supply or demand. A larger market like nickel takes longer to move than something like lithium, but that is the next kind of that paves the path for that next leg up in nickel. As more and more cars become electrified, that's going to take up a bigger proportion of nickel demand, and I think we're prone to potentially seeing that same type of uplift in nickel that we've seen in that lithium market over the last year, as you mentioned.
Well, and you've mentioned to me before, and we've talked about this, that there's really two issues here. One is that there is going to be an unfolding supply shortage, because keep in mind that nickel not only is used it's going to be an integral part of what's used in battery and EV manufacture, but also it's part of the basic economic infrastructure in the world.
Yeah.
And with a lot of different governments funding infrastructure projects such as this country has done, Canada's doing that. Pretty much everywhere you look is a means to try and keep some positive economic activity going forward. There's going to be more of a shortfall. And in a few minutes, I want to talk about also the other issue, and that is going to be green nickel going forward, because even in some parts of the world where there are nickel reserves, they're not necessarily going to be amenable to a lot of Western governments where ESG is a big issue. Now, I just put up, as you were talking, this slide, and we'll put it up here again, future additional nickel supply requirement. And this is from Wood Mackenzie, but between them and Benchmark, they've got some great information, great slides. They're really all over all of the moving parts of this developing industry, good and bad, both. And as you're saying, the supply shortfall is going to just grow and grow and grow. And that only means, to me at least, that nickel, which you say has been a laggard, is going to be playing some catch up here one of these days soon, won't it?
Yeah, the amount of investment that's required for new nickel mine development in the next 10 to 15 years is staggering. It dwarfs anything that's been spent in previous cycles. I mean, the amount of new nickel that we need, just the additional supply capacity that needs to get built out over the next decade or so is effectively equal to the entire global nickel supply in the year 2005. So think of that. It took all of humanity up to the year 2005 to produce circa 1 million tons of nickel per annum. We need to add about that much now in the next 10 years or so.
Wow.
So if you think about that in terms of the associated capex and the investments that are required, it's pretty staggering. It suggests really that in some ways we probably won't be able to get there, or if we can get there, it's only going to be through significantly higher nickel prices to incentivize miners to actually build these projects. It's building these projects is no small task, and in order to do so, from a mining company standpoint, you need certain level of certainty around long-term strong nickel pricing, and the market needs to continue to send that strong price signal before that capex will actually be deployed.
Yeah, and we've hardly in most commodities started that process to a great extent. I want to get into this ESG issue. You and I talked about this a couple of times in a recent past. I want our audience to really have this register with them. Now, I have talked a lot recently about some of the things that has gone on public policy wise in the world that has actually made things worse. Recently, I authored an opinion piece, a commentary for the Epic Times, and the title of it was "Making Bricks Without Straw, Biden's Raw New Deal for America," and talking about how, and of course, the title of that is kind of a play on the biblical story of when the Pharaoh got upset with Charlton Heston. He told him, now your people, I'll fix you. Now your people are going to have to make bricks without straw, but your tally of bricks shall not diminish. Well, what are we hearing in many ways from policymakers, both in the US and elsewhere? Canada, thankfully for you guys up there, is less bad in most of these regards because you've got more of a resource-oriented economy. It's not perfect, I know. But look, President Biden recently pulled the plug on one of the two Minnesota-based projects that have got the largest total resources of battery metals in this country. The other one, the EPA has thrown up more new roadblocks. I speak, of course, in this case of Twin Metals Minnesota and polymet mining. How are we going to do this? This gets back to my analogy of, our EV future is going to be like looking at that magazine when we expect a meal. And in Europe, it's gotten bad. Serbia just pulled the plug on a Rio Tinto lithium project. In the lithium area, a big sore spot was in some areas. This has dogged Thacker Pass on and off in Nevada, is that a lot of people are frankly, and look, if we back up a step or two to begin with, we needed to have as societies a serious, methodical, economically oriented talk about this whole subject a long time ago. Not trying to figure things out now by the seat of our pants and thinking that woke ideology and platitudes are going to get us where we've got to go. So you've got a lot of folks that don't want to see development. They're fighting development. Well, how do we build up these electric vehicles then? What do we build them with, et cetera? So in the nickel space, lithium is one area I've talked about separately, and about why I like companies like Piedmont and Frontier that've got spodumene hosted resources as opposed to the big clay and the strip mining operations are going to get bigger pushback. They have a bigger environmental footprint. Nickel, is it, and correct me if I got the number wrong, Martin, is it 60% of all the nickel production in the world right now comes from a place that actually the EU now says is off limits for nickel?
Not that it's formally off limits, okay, but the EU has basically said that by 2027, if you want to sell a car in that market, the battery in that car is going to have to come with a certification saying how many tons of CO2 were emitted in producing that battery, going right back to the mine source itself. And above some certain threshold, you won't be able to sell that car in that market. So that renders about 60% of the world's nickel supply off limits if you want to sell that car in the EU, because about 60% of the world's nickel comes from countries in Asia that have very high CO2 emissions associated with nickel production, because most of their processing facilities are based on coal-fired power plants, which has high CO2 emissions associated with it. So the nickel, it's not so much banning any particular country, but it's saying, if you want to sell an EV here, it's got to be with clean nickel. So the advantage that certain projects typically in North America have, and FPX's project would be included in that group, would be the proximity to renewable power. In the case of most Canadian operations, that would be hydroelectric power, which is abundant, cheap, and has virtually a zero carbon footprint in generation and distribution of that power. So the nickel coming from our project and from other existing mines and projects in Canada is going to be close to zero carbon. And we think that that's going to lead to real sort of ability to yield premium pricing for that product based on that carbon footprint. Again, if you think about the consumer here, the average consumer of the EV, that's going to be important for them in the same way that it's important, you know, for a lot of people where they buy their groceries from. They want to, there's a growing movement to want to support sort of local farmers. Well, the same is got to be true with respect to all of our consumption habits, not just what we eat, but also, you know, the things we wear on our bodies, the clothes we drive, or the clothes we wear, the cars we drive, et cetera. That same concept of supporting local production should follow through. You know, from a rational standpoint, it should cover all your consumption. So this idea of the sort of the NIMBYism that we see in certain pockets of North America around resource development is unfortunate. I do think the mining industry can do a much better job of communicating the fact that, listen, we all use these raw materials in one way or another. That's just part of our modern life. Even the most staunch environmentalist, you know, gets in a car, gets on a plane, uses a phone or a computer from time to time, and that's all good. So that they're a consumer of those raw material units. Now the question will be, do you want those raw materials to come from places in, you know, farther afield where maybe there's really lax labor practices, you know, people are dying on mine sites, you know, the local environment, you know, chemicals are getting spilled everywhere without any kind of consequence for the company. CO2 emissions maybe are really high around the processing. Or do we want it produced here at home, so to speak, in North America, where we have the highest standards with respect to how we treat labor, to how we treat local communities, how we partner with local communities, and to driving towards that low CO2 footprint owing to the, you know, abundance of renewable power sources we have, you know, in our countries. And I think, to me, the answer is obvious. The staunchest environmentalists, you know, should be the biggest supporter of the North American mining industry for precisely those reasons. It may sound kind of paradoxical, but when you think through the supply chain of those materials that those people consume, that's kind of how I arrive at that conclusion.
Yeah. You know, and when we talk about this, and I've always been wholeheartedly in favor of looking more to sustainability. I think particularly here in the US, we are obscenely wasteful. I mean, in the US, folks, for those of you that don't know it, and this might cause a couple of you to turn us off, but we have just under 5% of the world's population, and we use 25% of the world's energy. And there needs to be changes, not only in where we get it from, but in figuring out how to use less. There's a lot of good stuff, a lot of good ideas out there. But I like the idea that the whole ESG equation is a part of this. You know, I've told a story many times about one of my best recommendations of all time, a diamond explorer. And one of the things that started to turn on Canada's diamond industry, particularly years back, was the movie Blood Diamond, where it came to greater public consciousness that a lot of diamonds in the world, the diamond you just gave your girlfriend for your engagement, was mined by child labor and horrible conditions that were outlawed in North America a few generations ago, et cetera. That was already going now with some makers of smartphones, computers, and things like that. So where do they get their metals? Samsung has been big on this, I know, and Apple since has caught up. And it does stand to reason, Martin, that as we see this new and much larger evolving industry of electric vehicles, the same thing has to happen, and inevitably will, and it should happen. But near term, won't that even exacerbate things? I wrote at the beginning of the year about my own commentary on an especially good top 10 list this year that Byron Ween put out. And one of the things he talked about, that he warned of, is that we risk, if policymakers really don't get their act together and realize that they are telling everybody to make bricks without straw, we're going to hit a wall when it comes to these rollout plans for EVs and everything, because we don't have the beginning of the supply chain dealt with. Do you see any chance of that happening? And what would your advice be if you had an opportunity, Martin Turenne, today to sit down with Prime Minister Trudeau, if he can be found right now. That's another whole subject. Or to sit down here with our President Biden. If you had just a couple of minutes to tell him to grab him by the lapels and shake him, hey, dummy, do this, what would your advice be?
Well, everything we're talking about here really speaks to things that I think can strike a populist chord, right? Developing, North American industry, right back to raw material sources, keeping jobs at home, making investments at home through the entire supply chain. That puts people to work. That's secure. This is also an energy security issue fundamentally. And these are things that I think are agnostic across the political spectrum. We want to regionalize our supply chains. We've seen the risks of the kind of the global integration of supply chains. We saw that during COVID. We've seen that with the supply chain disruptions that are ongoing. So this idea of developing the EV sector, beginning with the mines all the way through to the production of the batteries in the cars, makes a lot of sense in every respect, from a geopolitical, security standpoint, from the standpoint of supporting, responsible economic development that's going to create, high-paying jobs, that's going to benefit local communities, and that's also going to, keep environmental protection at the forefront. Right. Both in terms of meeting, the Paris climate targets, in terms of reducing CO2 emissions and protecting local environments. You can, build and develop mines responsibly, and there's no better countries to do that than in Canada and the United States. We've done it time and again in the past, but we can continue to do it. We do it better than they do it anywhere else in the world. So let's take advantage of that kind of track record and enhance it.
Well said. Well, look, Martin, I appreciate you joining me today. Folks, I'm putting up FPX Nickel's website. As I said at the top, we're going to have a whole separate discussion with Martin not many days hence over FPX Nickel specifically. And the nature of their material that contains a nickel is rather unique. A lot of advantages to it, especially based on the kind of discussion we've had today. But check out their website, do a little bit of homework, look, take a look at them. And last but not least, make sure that you keep up with yours truly as well. As I said, if you're not already on my mailing list at the National Investor, make sure that you drop me a line to get on it. If you've never seen the green manual that I put out late last year, let me know. We'll send it to you, as well as the written material that will go along with this video that we did today. So again, Martin, I look forward to seeing you pretty quick to do that other video, and keeping in touch as we do anyway along the way. It's going to be an interesting ride. It's going to be a rocky one, but I sure wish one or the other of us could borrow Doc Brown's DeLorean and see how all this turns out and when it does.
Thanks, Chris. Great to be on with you.
All right, take care.
Thank you for joining us today on Company Spotlight with Chris Temple. Again, if you aren't already on his mailing list, make sure to write him at chris@nationalinvestor.com and ask to join.